Joe Lavorgna is chief economist at SMBC Americas and former counselor to Treasury Secretary Scott Bessent. Let's just be clear on where you stand on this first, Joe. Hike, hold, or cut?
Hike.
Hike now?
Yeah.
Hike tomorrow. Why?
Hike. Because the economy is fine. Inflation risk is to the upside. The Fed cut 75 last year. The last move very contentious when it was in December to guard against unwanted weakness in the labor market. Labor market's healthier, it's stabilized, it's improving. Take back that easing.
I'd be in the, well, I think that this hike thing is backward looking. Now, I understand what's going on with inflation, but talk a little bit, where do you see it going? Because the last month was when we had a miss in both the labor market and the inflation data for the first time in a while. It feels like the fever is breaking, and I'd like to be persuaded that he could do something where, what's the term for it? Tighten the balance sheet, but also lower the policy rate?
The data the last month was very friendly and would suggest they could wait. The problem is the Fed has missed its inflation target going on 6 years. If you look at the core PCE, it's over a point above where it needs to be. And if you look in the past, when has inflation gotten back to target? It's always been because the Fed's tightened. So the fever might be breaking, but there's no historical evidence to suggest it will get back to 2. Monetary policy isn't tight, with maybe one exception, housing, but that's only 3% of the economy. So you've got easing last year. You've got the likely rise in the real rate, R-star, because of all this CapEx spending.
Oh, really?
And if you're Kevin Warsh and you're looking at the trends in the data, you want the meetings to be live, this is a perfect opportunity to hike because it's not going to be a total shock, but it'll be a mild surprise relative to market pricing, and you move away from the Bernanke, Yellen, Powell timeline of always signaling a bias and then reconfirming, let's say, at Jackson Hole and then doing it at the September meeting, et cetera.
Steve, jump in here.
I think there's 2 questions that Joe raises, and I think he knows it. The first one is, should the Fed be hiking? And Joe's answered that question in the affirmative. The second question is, should the Fed be hiking by surprise? And I think it's that question that I think is worth exploring. If the Fed hikes tomorrow, judged by the pricing of the market, it's a surprise, at least from the Fed funds futures market. Most of the Fed observers do not think the Fed will hike tomorrow. The effect of that, and of doing it that way, would essentially be to put everybody on guard for either any possible outcome from a Fed meeting or potentially much more hawkish pricing than the market had previously had for future interest rates. So I agree that a hike could be warranted here and could perhaps help break the back of inflation and prove the Fed's and Chair Warsh's seriousness about inflation. I would think, though, hiking by surprise would be a much more perilous route to go down. So I would suggest that if Kevin Warsh wants to hike rates, he ought to let the market price that in ahead of time.
I bet he'd rather not tell anyone.